The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Friday, the 14th of February. Very good friend's birthday. But wait a minute. There's something else that's happening. Yes. Happy Valentine's, everyone. And may it be a beautiful day. And a long weekend is coming up. Thanks to Steve Rhodes kicking us off at 9 o'clock this morning. And happy Valentine's to you. Happy Valentine's to Tom and Daryl. Great show just prior to mine. And hopefully we'll keep up that tradition of good shows. Straight after me, you got Nico and Paige. Another wonderful show. This is on health. And we go right on. We've got Daryl back again at 1 o'clock Eastern Time. We've got at 2 o'clock, you got Dave White. You got 4 o'clock till 6 o'clock, Tom O'Brien. And, in fact, all I can say is, what a market. What a market. The Dow is up 61 at 16,089. The S&P is up 3.5 at 1833. The comp index is up, if I can see it from here, 10 at 4230. Gold is just not, there's no relief there. It's up 16 at 1316. Silver's up 79 cents at 21.19. Silver's just taken over. It's playing, this is the catapult. It's just playing catch up here. We've got crude oil down a little bit at 99.99, and we've got bonds down 5 seconds at 132 and 27 seconds. Dollar is down 13 ticks, and you've got the euro up a little bit. This is a market. Let me explain what I'm looking at. I shouldn't, in fact, be talking about all this stuff. All I should say is, look at this. The VIX index is down 36 cents, down 2.55% at 13.78. As long as the volatility index is pulling back, it is buying pressure. Remember, forget this fear and greed nonsense. It is buying pressure and selling pressure. Keep it as simple as possible. Why do I say nonsense? Because there are times when the volatility index has moved this way, where the volatility index has been extremely low. And that's got nothing to do with greed. In fact, if you weren't buying in 2004 all the way through 2005 into 2006, before the volatility index broke and held above the 200-period moving average, you would not be making any money. So I consider it to be very important. The fact that it's gone back down again, today's Friday. If this week, let me just move this away. This is the monthly chart. So let's go back to the weekly chart. Have a look at this. Make it as simple as possible. Here's your weekly chart. Look at that. This is underneath everything right now. It's even underneath the 9-period exponential moving average for the first time since the week of the 17th of January. Buying pressure. It's the reason why yesterday, on that very sharp opening decline, we went long in my opening call. We went along the 300% S&P or SPY, and I will try as much as possible to hold the position because I think we're breaking out. We missed by 1 penny getting a stock this morning. I've only got buys in my opening call, my Trader's Corner. We missed by 1 penny a stock that is now up a good percentage, and it's a very important stock. I missed by 1 penny. You know, I thought about it a lot, and I could have just dived in and said, you know, it's acting well, blah, blah, blah. But I thought it's better to have the discipline of constantly keeping your stops, entry points, and exit points. If it acts very well today, it's only leg B. I don't mind actually grabbing a position, a smaller position than next week when the market opens on Tuesday, and adding another position, small position lower down. Why? Because I think that we're looking at is that the rotation, and I have to, I'm always as straightforward as I can be. I just found over all the years that if I don't say dumb mistake, which allows me to free up my thinking, I do not have on my shoulder here, for those of you who can actually see me, this shoulder here, oh, it doesn't matter if it's that shoulder, to have that little elf, that little, your conscience sitting there pointing a finger at you, saying, oh man, you've made this big mistake. You're down 20%, 30% on the stock. Get rid of, you don't want to get rid of it because it's an embarrassment. I want to just say, wrong, out. I'm always looking at this fresh. So I want to say, I had a grumble from someone the other day saying, hey man, just last week you were negative, and now suddenly this week you're becoming more positive. You're starting to look at buys and you want to go long the S&P. What's going on? I'll tell you what's going on. Imagine if I didn't do that. I'd be sitting here saying, oh, the market is up huge in the last few days, and I'm just sitting here watching. No, I have to follow the charts, and I have to follow what? Did I know that the volatility index, which is at 21.48 just a week and a half ago, would in fact plunged down to 13.75 from a peak? See, no. But I did say that there was a cycle of the 15 to 17 week U-shaped pattern, and that unless we close in that area above that downtrend line, above the 200 period moving average of 18.39 in the weekly chart, I had to be careful. So I'm being very careful now, and I'm being long. So I just wanted to get that out the way. Now, there are a couple of things that are happening. During this most recent, let me go to this chart. Let me just show you something. I receive a number of emails over every week. I get emails about different aspects of the market. I tend to just either read them and ignore them, read them and say very interesting, print them and put them on one of my many desks here, and then not look at them. Why? I do my own work. I have to do my own work. I've always done my own work. If I had to have listened to anybody, probably wouldn't have got into the business. Scary parallel. This is Dow Jones Industrial Average 1928 to 1929. And it shows the current Dow Jones Industrial Average current period. Actually, it's a little behind because we've actually moved higher. And I'm looking at this and I'm saying, yep, it's a very similar pattern. But there are so many aspects that are dissimilar. If you take it in the context of not just 1928 to 29, remember, where's that book? Bill Bryson, One Summer, America, of course, a piece of paper is covering it. America 1927. I told you about this book, a really interesting book. It's actually written as a journalistic a piece, and I have to tell you, I find many faults with it. I also love certain aspects. So I false only because of what I wanted, not on the book itself. So I wanted to discuss this just for a moment. I can't blow this up. I'm just going to keep it as it is right here. In this particular parallel, there is a lot of evidence to suggest that we are, in fact, in the same socioeconomic, morality chart, and I can add a couple of other nouns to it. But there are so many differences that I have to tell you, in looking at this particular chart, I'm saying to myself, keep it in mind, but ignore it. Watch that volatility index. That's the most important thing. Watch bonds. The TLT is holding above 105. It is right now at 106.41. That trading range that we're looking at, where the H can go to an M pattern, can keep going for a long time. Yeah, we could go down to the 103, 102 level, or we could, unless bonds spike sharply above 110, unless bonds close sharply above 110, I have to say that they're being managed at this particular point, just like the dollar is being managed, and the dollar is down, and the pattern has got the H that might go to an M pattern in the weekly. I'm just watching it. It's really just stuck in a range, and until the dollar breaks above 82. Dollar breaks above 82, and bonds go. The TLT goes above 110. We have something very, very different. Now, I want you to do something else. Let me show you this. In the chart patterns that I look at, my 4 Dow horsemen are actually holding pretty darn well. And I'm looking at GE, and GE up today in leg B. Very nice. Right there. Held the weekly up channel in that inside track by propellant zone. If it closes in the under 25, no, I'm sorry. If it closes under 24, I'm going to be safe. Under 24.50, certainly underneath 24.32, the low of last week, bye-bye. It says watch out below. It also says watch out Dow. All right? The monthly chart, I don't want to do anything. The month is not finished. It's holding the 9 EMA. But right at this exact moment, at 11:17 on Valentine's Day, AM, this is looking quite good. I was asked about, okay, I'm going to get to it in a moment, IBM. Look at this. The 200-period moving average was a springboard for that move. It did make a lower low of, as I recall, 172.73 times 2, then a 172.19. So it's made a lower low, but just by a hair, 172.19. Now that's very interesting because it's got 3 lows of 172.57. That was very important in the H pattern. It held above it for 2 consecutive weeks, 172.73. There's that H. It breaks above peak B, goes to C, and then it pulls back. This is like an engulfing candle. And it goes underneath to 172.19. And now look what it's done. It's made a 50%, more than a 50% retracement. That is good. It's kind of saved the day. When you look at the Chapman Wave flat base restart in IBM, you'll see that it did exactly what it should. It went to that E, pulled back. It went underneath the tremendous support, which was the key level of 177.35. Breaks under that. Doesn't close 170. It does. It closes once. No. Yes, 176.68. It did close once, but then it retested at 172.19, and it bounces back. And if IBM is able to clear it's at 183.99 up 2.15. If IBM can clear 185.60 to 186.70 by the end of February, that's going to be really important. Okay, that's the monthly chart. Now let's go to something else as we're about to go to a break. I'll just quickly do. There we are. Let me move it over. We've got Triple M. It's been a monster stock to the upside. Had a big pullback. It's acting quite well here in the daily. It's okay in the daily. The weekly is holding this triangle support or rising wedge. The monthly is above the 9.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Let's just finish this analysis. United Technologies trading at 113.12, down 18 cents. Made a peak B in the daily. Nice action, not great, but actually positive action. That's strengthening. I like that. And the weekly chart, I really can't say. It's held the up channel, the inside track support, got a Roman candle from last week. It has to close decisively above 114.74 to negate that, at least for a few weeks, that candle, the wicks low. And the monthly chart is still it's at peak E, but it's looking very good. You know, after peak E, you shouldn't have a candle like this. It should be down towards the lows, which it was just a few days ago. So I'm looking at this and I'm saying, okay, you tell us, United Technologies. In a way, it used to be, it's a longer-term pilot light. General Electric is actually more the shorter-term now pilot light indicator. I had a question about IBB. IBB. IBB is, in fact, the NASDAQ iShares Biotechnology ETF. And right now, this is a very interesting thing. I had someone email me to say, I'm waiting for it to hit 261, round number high, and then I'm going to finally do some shorting. Well, today's high, let me just finish changing this color, was in fact 261.00. I would say that's a round number high. I think from looking at the charts, it's okay if you bought the BIS, you're already in the money. But I would keep that real tight for two reasons. I'm just going to pull up the 120-minute chart to show that we've just made a leg D. Very good chance of we making a peak D. Stochastic, though, is at 94% in the stochastic. I've heard so many people. I'm thinking that I might have to do a workshop on the stochastic and the MACD. I've done it before, but it's time to do it again. I've just heard so many people talking about the stochastic on CNBC. Now they're starting to use the Kramer introduced the MACD. Now they're starting to talk about the stochastic. I've just done so much work on the stochastic, and especially the MACD, that I think it's time for a refresher course. Remember, the term that is used just the same as in many areas of technical analysis. When it goes above a certain level, in this case 80%, it's called overbought, and if it goes under 20%, it's called oversold. I say, are you crazy? What are you talking about? If you never looked at charts? If it's over 80%, that's what you want. That's a confirmation that there is buying pressure. As long as that holds, you'll hardly ever find a stock crashing when the stochastic is still at 80%, unless it's come from 96% going all the way down to 80%. That's 16%. Then you will see a very sharp drop. But that's what you want to see. When the stochastic is down in the under 20% like it was here, that's where you got to watch it. When it turns up above 20%, that's good action. Holding in the teens, that's weak action. So I need to explain. Also, there are many other aspects to it that are very important. And all I can say is that in the IBB, you're at 92%. In the stochastic, having just gotten there. So if you have to give it a few days. So let's just say Tuesday we come back again. By Thursday afternoon or Friday of next week, if the IBB is underneath 254, especially if it's under yesterday's low of 253 round number, let's call it 253. If it's closing under 253 on any day, and the stochastic has gone from this 92% down to the 83% area, I don't think that'll happen. But if it goes to 83%, and then by Friday week or Thursday or Friday week, the stochastic's under 80%, absolutely, the IBB has finally made some kind of a top, maybe a top of significance we don't know yet. Meantime, back at the ranch, nice pullback from leg D, probably a peak D on Tuesday, and then we'll see how it holds, whether it starts to move higher and push the weekly chart higher. This could be the top. This person could have got the exact top. I'm out of anything long and short at this particular point. I wanted to be holding long in this particular. We just missed getting in on my update yesterday. Or anyway, I can't remember now. We just missed getting in by about 15 cents or something on the long side when we switched to the long side. So IBB, keep watching, but I think there are a number of there are just too many fund managers have used this to save themselves when the market keeps coming down, and they buy the IBB, and it just saves them every time by going to all-time highs. That's going to run out of steam. I think we're looking at the coda formation right here, which could take quite a few weeks as it accelerates, and then it spirals even higher. But not if it breaks at 253, 251, key support over the coming week or so. Just real quick, check my emails here. Any questions? No? All right. Now, don't forget. Oh, Marvin. Hey, Marvin, how are you?
Thank you.
Wow, sorry, I overlooked you. I got a whole bunch of new things sitting up here. You wanted to look at the?
GLD.
I'll be right back with, can you hold on?
Sure, no problem.
Great, I'll be back with Marvin looking at the GLD.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We are back. We are back right at this very moment with Marvin in Orlando. Marvin, you're looking. Do you have a position in the GLD?
No, I don't. I remember you saying that GLD may make a bottom somewhere around April, May. So I was just wondering if this is where it's going to pull back after this move, or is it a shorting opportunity?
Okay, so now let's look at this. There are a couple of things that are going on right now. If you look at the weekly chart of the GLD, folks, we're looking at the GLD, which is the Spider Gold Trust series. It feels like it's had a phenomenal move, but in fact, it's one of the smaller moves. The big move was from 114.68 back in June of last year. To the high of August, the week of the 30th of August, to 137. This move is 114.46 to today's high, and today's high is a gap up in leg. I'm calling it for the moment leg E. It might be E/B because the stochastics at 93% and the MACD is still very strong, and it's getting closer and closer to the 128.52 200-period exponential moving average, which it hasn't even kissed for being Valentine's Day, since it broke down. It kept hitting it back in, right there. It kept hitting it back in March, February of 2013, but it really broke down December the 18th of 2012, below the 200 period exponential moving average. So I'm looking at this and I'm saying, okay, the stocks themselves, some of them have had fantastic moves. That, to me, is a sign of strength, number one. Number two is it's also saying that within the context of the GL, so you don't have a position now, you're looking to get in? Is that right?
I was wondering if it's a good idea to short at some point, or is it better just to wait until May?
So here's the question, and it's a good question, because if this is a gap up, a kind of what I would call not an exhaustion gap, but if it's in that category of spiking on a Friday, the last day of the week, to a new recovery high, and it gaps up, and there's a doji candle there, it makes it very clear. It makes it very clear that there could be a pullback. I would just say that this is a pullback. In fact, I would have to say to you, if you listen to Steve Rhodes earlier on, Steve was saying, hey, this is probably one that you don't want to be looking at the short side. I looked at the DZZ the other day, and then I thought, no, why? This is what, now finally it's one of the strong sectors. I don't want to be looking at this as anything but an entry point on the long side. So in the pattern that I talk about sometimes, which is the strong leg up, the body, and then the neck, that's the stork leg formation, we could be forming some kind of a head, which says that all that could happen is that it pulls back to the 123.5 to the 122 and 51 area, which was the high of the 29th of January. So I'm going to suggest, yeah, on the DZZ you'd get a nice percentage, but this is powerful action, and I would not want to short with a stochastic at 93%, excuse me, the way it's gone up. This is very different to the way it went to peak D at 131.44 on the 28th of October, because if you look at that, the stochastic also was very good. It was at 92.79%, 91%, and then it turned down within a couple of days. So I'm going to say to you, rather than thinking of the short side, although you're looking at this more from the way you asked the question, more as an intermediate term trade, right, to buy.
That's right.
So
yes,
in the meantime, you're saying, well, maybe I could just short it in the meantime while I'm waiting. I would rather say to you, you know what, you might miss a couple of points on the DZZ, which is 200% short of the gold contract, which this is based on. I'd prefer to be looking at this as a buy, because it's in the phase now that has started to build more strength. That's number one. The rally in the actual price of gold isn't even close to the rally in some of the stocks. Silver stocks have just come on quite strong. The SLV, the rotation has gone today towards the SLV, which is in leg C up in a gap, which says, yep, it could still make a nominal new high above the high of today of 20.49. I'm going to say to you, let's not look at April, May. Let's look at what we've got right now. And right now says that there's very strong action. There could be a reaction next week with some kind of a pullback to fill some of the gap. I would rather be looking towards entering long than going short. So if you aren't in it, I wouldn't say to go long now. I'd say, you know what, give me a call round about Wednesday if you are free, if you're able to do that. Wednesday of next week will be a perfect time, because we'd have follow through from the weekend. Sunday nights open in Europe. Monday's open in Europe. We're closed. By Wednesday, we'll get a real good feeling. Tuesday, we'll get a real good feeling for what gold and silver are doing and the stocks. And by Wednesday, we'll be in a position to be very clear and give exact parameters of what might be an entry point on the long side, or whether or not we're holding up there. And maybe there is a very quick short in the DZZ for about a move from DZZs at 633. Maybe DZZ, let me just put it in here, DZZ. Maybe DZZ can go from 6.33 to the 666 level. 5, 6, 7, 8% is very nice while you're waiting. Maybe that's the play. But right at this moment, I say, hold off. I'd rather sacrifice something on the short side than to see you. If you're looking at the DZZ weekly, you'll see that's not a positive pattern. It's a pattern that's made a double top, and it's probably going to maybe bounce a little bit, but I think it'll break under $6 at some time. So let's look at it in this particular period of February and see how we can deal with that. Okay?
All right. Thank you, sir.
Thank you very much. And thanks for calling, and have patience. we'll be there very soon, maybe next week. So let's go to John in Philly. Hi, John. How are you?
Hi, Basil. Thanks for taking the call, sir.
My pleasure.
Basil, as you know from Al, the producer, I've called in about the Dow Futures, YMH4.
Yes.
Basil, frankly, I am not calling to ask your current Chapman wave read on that instrument and where a buy and or sell might be.
Okay. I'm showing it right now for people who are looking at Tiger TV, yes.
Instead, I'm calling you as a student of the Chapman wave. And of course,
Okay.
I've long ago purchased your Chapman Wave CD and studied and applied it and taken a couple of your webinars. And Basil, I have always had difficulty in understanding how to apply the Chapman wave count when it recycles either up or down. And I'm wondering if you might use the 30-minute charts, the bar chart on the YMH, or frankly, any instrument that you would consider choosing to use to elaborate, highlight, and explain how and when one goes from labeling, say, a peak D, E, or F
to an alternate count
to
E
a new
slash
A, B, and C.
F slash B, right? So,
Exactly.
John, you're able to see the charts right now. What I've got is I've got the YMH 120-minute chart. You know what I'm going to do? Because perhaps not many people, it's a great question, and it's a question I get all the time. It's a question that I ask myself very often because if there's an alternate count, you could get to an E slash A or an F slash B. F is very negative. B is very positive. That's like saying, the market could go up or the market could go down. What is the point of that? What I always say is continue to use the alternate count when you have a question. For instance, right now on the YM 120-minute chart, I've got the peak D with a very nice pullback, perfect pullback at on the 12th of February at 16,008 at 10 o'clock in the morning. And that was yesterday. It pulls back, holds the 200-period moving average, which you can see from this chart was a resistance, has become very strong support, goes to a nominal new high at 16,012 at 4 o'clock on the 13th. That's yesterday at the close. Pulls back a little, and that was E slash A. Now I'm going to move this up arrow away. Then what happens this morning, it suddenly breaks out very strongly. What I did is I went straight away and I put an up arrow and I called it B. Now normally I'd go F slash B, but if you can see that the stochastics at 88%, there was a great divergence as the market pulled back. The on-balance volume held beautifully, and what it did is it formed a cup formation that was a breakout to the upside. And my suspicion is that the bias has to be that this is a leg B, and that over the weekend, going into Monday, there could be a little bit of a pullback. When we get back, either later on Monday afternoon or when we get back on Tuesday, there's going to be a bounce to make a C and then a D. That's my thinking right now. There are times, if I can just find it at this point, because it's a really good question. I'm going to go to the QQQ, and you'll see that in the QQ, and I want to do this because many people actually track it. If you've got a weekly chart, I had before in the last peak on the week of the 24th of February at 89 round number high. It also even had a round number high. Then the MACD pulled back and the stochastic pulled back, and I had a G slash C. And all the technicals, everything about it said, hey, it doesn't matter what your wave count is. This is a pretty serious pullback. And in terms of pullbacks, you can see that from the pullback back at last year in June, this, in fact, was the deepest pullback in the Qs, going from 89 round number to a low of 83.74. Well, that's not even 7 or 8%. It's not even 10%. And then what happens? We get a massive spike to the upside. And just a few days ago, what is it? It breaks the 89 round number high, which is peak D in the daily with a doji high. with that sharp pullback from a daily perspective. That was a pretty sharp pullback. In the weekly, it was the sharpest, but percentage-wise, it's just like a blink of an eye if you're looking at the monthly chart. And now I'm calling this a recycle leg D. So that's how the recycle will work. But now your real question pertains to, what do I do here? The Qs went from 89 down to 83.74. On the 5th of February, it went below the 84.05 start of the previous buy signal.
Yes.
However I counted in the Chapman wave, the rule is if you make a new high, I don't care what the letter is, that new high essentially, and I really have to, I'm going to put it in here because that's the rule of my notation, should get an up sign. In fact, I mean, it's shocking that I'm doing this, but I think this is leg A based on the Chapman wave in the daily chart of the Qs.
Yeah.
I mean, is that possible?
And Basil, the rule is since trough D, since that low went below the prior swing low, you cannot label this.
Swing low. It was a prior low that triggered a buy signal that went all the way to a full peak D in the buy mode.
Right.
That completed it.
Yeah.
So now we're under it at 83.74. I don't care where it closes. It went under it. That just completely negates any recycling. I have to call this A. I have no choice.
Got it.
So though it isn't like it's one question, it's a whole series of questions. But when I have all the technicals in favor of the particular pattern that I'm looking at, for instance, right now, I've got this as, this is F in the 120-minute chart. Everything about it says we should be pulling back. But it might have recycled there as well to a brand new A. I'm just saying I don't have any sell signal yet, but I do have a caution signal. So I'm suspecting, and I've even got the question mark there, that this is going to be an F and that over the weekend, or maybe a little later today, we get some kind of a pullback. But it's so far, with such strength in the technicals, at 95% in the stochastic, it should just be a minor pullback to between 89.34 and maybe 87.80. And then we should make new recovery highs soon after that. I hope that explains some of it.
Thanks for sharing all those nuances. It does help.
Thank you so much for calling. Always appreciate it. Very cogent question as always. Have a great weekend and a happy Valentine.
Thanks, Basil. Bye now.
Thank you. Let's go to Dan in Baskin Ridge, New Jersey. Hi, Dan. How are you?
I'm doing well. Thank you. What's going on Great Panther, GPL?
Okay, GPL trading right now at $1.17. This is a stock that has gone in that capital A, the pattern that I look at, that resembles the Eiffel Tower or the letter A, capital A. Let me see if I can get that to reactivate there. Yep, there it is. In the daily chart, it's only leg C, A. There. Hey, John, I hope you're looking because this is exactly the recycle that I was talking about. It went from a peak E, Great Panther GPL trading at $1.17, up 12 cents, up 11.43%. And that was an F/B, but the technicals were good. So there's no question now. I'm not putting GC. I'm putting C in the daily, and I'm putting leg D in the weekly, and it's still only a leg A in the monthly. So I'm going to ask you, Dan, just before we go to the break, do you have this? Is this a position you have?
No, I was stopped out at 99.
Oh, okay. So now let me do this. It's trading at $1.08, and you'd like to know when you could get back in?
Correct.
Okay.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Yes, folks, please. Living a Primal Lifestyle. Fabulous show. Nico and Paige coming right up. Let's go to Dan. Dan, so you are out of GPL. It's showing it. It's actually making a peak E in the 120-minute chart at 116. I'm going to suggest 2 trades for GPL. It is leg D in the weekly chart, but it's really the monthly chart that's starting to improve that is impressing me right now, and the fact that the stochastic's at 81%. I do have it in leg C. I could call it G/C, but I really think it's leg C in the daily. My suspicion is it's going to pull back, and it could pull back between 113 and 109. At that point, it might not even get that far, but by Wednesday, it might be trying to make a leg D above 1.22, and then it could take a longer-term breather. So what I'm going to suggest to you is, because in leg D in the weekly chart, I should say, be careful, because it makes a peak D. It could pull back sharply. It has done that before. But the fact that it's tackling the midpoint of the candle of the 30th of August, which had a high of 134 and a low of 1.05 at that peak D, if it gets into 116 to 117, 18, somewhere around there, and it closes on any daily basis in that area, that means that there's a real good chance that the target of 134 in February could be hit. So I'm going to make the suggestion that any pullback, let me go back to the 120-minute chart, might not give you a chance. I would suggest you got to have a little patience now. You got out at 99 cents. I don't want you jumping in now when it's about 25, 30% higher, but I would like you to at least nibble on a position in GPL, Great Panther Silver. If it pulled back towards 111 to 109, that to me would be a little tiptoe in. You could start a position, but it's just a starter position. It might turn out that you get it there and then it just moves up and you don't get any more, but you can add to it on strength. But that's the area, I think, after a move like this, that would be the safest. The only other way is just to jump in now at 117 on a tiny little bit and then say, no, this is just a feeler position, but I really want to get into it in that 109-ish area. So that's the only way I can help you right now, only because you have the baggage behind you that said, oh, man, I had it at 99 and now it's trading up in the 117, 120 area. So
no,
I prefer that you don't double that kind of mental image. You prepare and you say, I'll wait. I'll have patience. I'll wait for the pullback. And the safest area would be to start a position somewhere under the 1.10 to 109, 108 area, a starter position. I hope that helps you.
Yeah, that's fine. I'm not worried about it. I mean, I was just in it like 68 cents, so I'm not worried about it.
Oh, all right. So you made money. That's great. If you made money, then that's terrific. What I'm going to also suggest, if that's the case, then a pullback in the next 2 days, you could start a little nibbling position, maybe even before it gets there, knowing that it could go a little bit lower, but it's a starter position so that you really have a feel for exactly how it's acting with gold and with the market, but it's only a very small position if it's above the level that I was talking about. So, hey, nice trade then on the starter position, on your other position. Let's see what happens here. Maybe we can talk again Wednesday or Thursday.
Thanks, Basil.
Thank you very much for calling, Dan. So, folks, a couple of things. Let me just do this before, because we'll have a day off while the overseas markets are open. I don't hear the music, so it gives me a moment. This is leg A. It is still leg A, and the Dow is up 77. The S&P is up 484. Dow is stronger than the S&P. I'm usually a little bit cautious when that happens, but I do believe that this is the start of a move that has the potential. I don't know if it has the potential to go to the old high, but it has the potential on the daily chart to go to a leg B and then a leg C and maybe even a D. So I love what's going on. Watch the volatility index. If it snaps into the 15s, then you got to be careful. Right now, it says buying pressure. Have a wonderful weekend. Happy Valentine's, and stay tuned for Nico and Pay.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
You're watching Tiger TV.